Consumer spending is still going strong. U.S. retail sales rebounded in October on gains from auto dealers and filling stations, but consumers did cut back on purchases of big-ticket household items, which could lower expectations for the holiday season. What do these numbers really mean? What do they actually tell us? And how does the consumer drive the economy? Guess what? It's time for Yahoo U. Yahoo Finance's Brian Cheung is here with this week's lesson. Brian?
All right, well, class is in session, and today we're talking about the one bright spot amid all the global concerns right now, and that is the U.S. consumer. Listen to any Fed speech or market analyst, and you might hear this buzzword, that the U.S. consumer is a big part of the economy. Here's Fed Chairman Jerome Powell this week.
The 70% of the economy that is the consumers is healthy, with high confidence, low unemployment, wages moving up, very low unemployment, labor force participation. That is what is driving our economy now.
70% of the economy, what does that even mean? Well, that figure comes from personal consumption expenditures. That's an index of consumer spending on goods and services as measured by the Bureau of Economic Analysis. And this chart shows you the percentage of U.S. consumption that's relative to GDP over the last 50 years. And a pretty clear trend here going upwards over that time. But what we've seen is that it's actually leveled out slightly since the 2000s. And actually, since the Great Recession, it's extended to the current day. The U.S. consumer has steadily represented, actually, since this point in time, about 68 to 69% of the economy. Now, of course, it's a good thing for a strong consumer to drive an economy that's as large as ours, but there are a couple of things you need to know about this chart. First, this actually doesn't control for household debt, so Americans have increasingly relied on credit to fuel these spending habits. And second, consumer actually could crowd out investment spending, which could actually be a better driver of longer-term growth and productivity gains. But regardless, let's take a look at the report. Nonetheless, amid those recession worries, we need to understand exactly why the consumer is an important part, and it's looked pretty good so far. So here are the numbers measured by the U.S. Census Bureau and presented as month-over-month changes. And the most recent read for this morning covering the month of October was 0.3% month-over-month. But here's exactly how they arrive at that number. So the Census Bureau samples over 11,000 firms and collects data on sales and inventory for the prior month. But it actually takes some 44 days to process that data and release a full report, and we don't have the time for that. So to give the public a little bit more of a timely read on how the consumer is doing, they'll actually sample a subset of that, about 5,000 firms, to create what they call an advance report that comes 14 days after the end of a month. So this is actually the advanced reading that you're looking at right now. And as you can see, there was actually some concern that in the September report, which actually came in at negative 0.3%, that maybe there was some downturn happening. But what we've seen is that that may have been a blip. Or was it? See, we can actually unpack the retail sales numbers. They actually give you a pretty nice granular breakdown of what's actually underneath the retail reports. So for October, the motor vehicle spending actually looked quite nice. It was actually up by 0.5%. But there are other big ticket items like electronics or furniture that didn't look so good. It was down 0.4% and down 0.9% for the last month. But we can even get more granular. We can get spending on sporting goods, musical instruments, books, which were actually down by 0.8% during the last month as well. So it looks like it was mostly online shopping and gas that drove the spending increase that we saw in the month of October. By the way, something that's important to note about retail sales compared to the PCE that I showed you in that first chart is that retail sales covers mostly goods, whereas PCE actually also includes services. So in the aggregate, why does this matter? I mean, retail sales have been a key indicator of a massively important part of the U.S. economy. So consider the financial crisis, when we actually saw retail sales decline as much as negative 3.9%. So not only do consumers represent a huge part of the economy, but they reflect the optimism over economic conditions. So people will spend when they're confident that they can afford it, but they'll actually bear down and hold off on purchases when they're scared the job market or the economy at large might turn down. But for right now, despite the noisy politics, the U.S. trade war, and concerns over sluggish global growth, it looks like the U.S. consumer for right now still looks all right.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.